Hey everybody, Jeff Garber, mortgage expert, and it is Market Monday, where each Monday I'm going to give you an update on what is going on with mortgage rates. So, unfortunately, the only bit of good news today is the bond market is closed due to Columbus Day. So, there's no trading. Therefore, mortgage rates can't move, which is good. However, if we look back at this chart here, we see that really since September 13th, it goes back much further than that. But look at the significant decline in the bond market here. So when bonds go down in price, rate goes up. So you can see this trend. It goes all the way back to really May of considerable amount of sell-off in the bond market with a couple pockets of improvement. But at the end of the day, the overall trend in the bond market is definitely down, meaning rates are going up. Now, if you look at last week, it was a lot worse during the day. We actually touched this floor here, and then it kind of bounced back. So we don't know if this is going to be the start of maybe an attempt for mortgage bonds to regain their footing and maybe have rates come down a little bit, or are we going to have some consequences from what's going on in Israel, which is a tragedy. But unfortunately, when you have geopolitical issues like this in war and it affects oil and whatnot, which is inflationary, that could not bode well for us. So we won't really know until tomorrow on exactly which direction the bond market's going to go. But right now, the trend is definitely not our friend. The trend is for bonds to continue selling off and mortgage rates to keep rising. Why is that? Well, at the end of the day, it all comes back to inflation. And while inflation has come down significantly, we've had a couple readings over the past couple months where it's going up a little bit. That's spooking the markets, and the bond market is going to react to what inflation does. What we need to happen is we need to know that inflation is fully under control. Once that happens, then mortgage bonds will continue to, will start to go in the opposite direction. And maybe even next year, at some point, the Fed will announce that it plans to actually cut rates, which will be another good sign for the bond market that inflation is under control. And maybe we start to get that rally. But for now, we're definitely going to, be on the higher side with rates. Unfortunately, we're going to have to see what happens this week with inflation numbers that are coming out, as well as what happens in Israel. And we'll keep track of it for you and bring you the updates. So hope you have a great day.